Despite the longer-term bearish trend at play, oil prices remain very choppy and are creating a lot of volatility and trading opportunities in the short term. Hello and welcome back to our channel. My name is Daniela Hathorn from Capital.com, and in today's video we are going to be looking at oil prices because we have seen some interesting moves over the last few weeks. Now, I did a video at the end of September, I believe, and we were talking about a technical setup in WTI, and it has played out really nicely. So in today's video I want to focus mostly on the technical setup, so we'll be spending quite a bit of it on the chart. But of course, before we get into that, please like this video, comment, subscribe to our channel, and hit the notification button if you want to be kept up to date on all of the latest content we are posting. So as I said, today it's going to be all about oil. We're going to be looking at US crude, WTI, because of course that technical pattern is at play, and I want to revisit that because there is a lot to talk about. But of course, quickly, I want to do a quick fundamental recap of what we have at play, because we have seen that choppiness in oil prices, and it is quite a clouded market at the moment. There is a lot of noise going on, but fundamentally, not really much has changed over the last few months. We still have demand and supply really battling it out here to determine oil prices. Now, after the rapid rally we saw at the beginning of the year on the back of those tensions between Russia and Ukraine and what this meant for supply of Russian oil, we saw this longer term bearish trend unfold, where we've seen slowly those rapid rises in oil prices start to unfold, heading towards a more sustainable longer term price range. Now, at the moment, we have, of course, on that supply side, still those concerns about tightness of supply with the Russia-Ukraine situation continuing to unfold. And of course, we also have OPEC Plus delivering production cuts because they believe that prices are too low and they need to be kept elevated more to reflect the current condition of supply of oil. So that's on the one hand. We do have that potential floor being kept there by OPEC. But on the other hand, we have those concerns about growth. They are more widespread now, and they are starting to attract more attention. We've seen it elsewhere in the market. We have equity markets still coming down heavily. We've got things like copper, which is a barometer of global growth, also coming down, suggesting those concerns are still pretty much there at play. So, of course, that is keeping a cap on oil prices and keeping that downtrend at play. We've also got the Biden administration talking about the release of the SPR, how that is still pretty much a tool that they'll be using. Of course, that keeping a cap on oil as well. So, as I said, not much has changed there in the short term in terms of the fundamental drivers. We have seen in China the re-election of President Xi for another 5 years, another term there. So, of course, he has been very strict on not loosening those zero COVID policies. So, yes, that has added a little bit of short-term pressure there on oil prices because of those concerns of growing and stemming out of China. But nonetheless, the drivers still remain pretty much the same, and that's what's been battling back and forth between seeing those rallies and those sell-offs in oil prices. Before we get into the chart quickly, as always, let's take a look at some areas to watch out for before we look at the actual numbers. So in terms of resistance, we have the Friday's high at around 85.63. That is the closest resistance in terms of the short term. Then we go to Thursday's high at 86.90, and then to the high of October 14th at 88.54. And then if we're looking at support, we've got Friday's low at 82.98. We've got the low from October 18th at 81.23. And then we go to the lows of September 30th at 78.71. Okay, so here we have it. This is the West Texas Intermediate chart on the TradingView platform. And as you can see, some clear patterns here marked out. Now, if you remember at the end of September, we were talking about this wave pattern that had been unfolding since those highs that we saw back in March. And just as a quick recap, if you didn't see that video, we'd seen this pattern where we saw a quick rally, which was then preceded by a downtrend that ended up marking a descending trend line resistance, at which point we saw any attempted bounce higher kind of clash with that trend line. Now, the first one was a little bit of a tester there. Then we saw the second one unfolding from those highs back in June. As you can see, we saw that strong rally to the upside, reaching that peak and then coming down and forming that descending trend line, at which point we started to see quite a few areas where we bounced off that resistance before breaking higher. Then again, back here at the end of August, beginning of September, this is the one we were looking at when we filmed that video at the end of September. As you can see, it was around this area here. We actually did see a bounce to the upside following that video, and we did see a few areas of resistance, as you can see, acting pretty nicely there before we saw that bounce higher, breaking above the area, pretty much leaving that previous trend line obsolete and then heading and focusing on the next one. So we saw that strong rally here at the beginning of October, as you can see. For me, I painted this trend line just at the beginning here, actually on the 10th of October. I started to see this longer term rally kind of running out of steam and seeing those sellers, that selling momentum coming in. So I focused as this point as the next high, the next short-term high, expecting to see those days of reversal, those sessions of reversal before seeing a little bit of a bounce to the upside. Now, I'm going to be honest, I thought this short-term reversal here, which was actually setting up the area for the descending trend line resistance, was going to come a little bit later. In fact, you can see these blue rectangles here. Those were marking the days it took between the peak and the next rally that marked that descending trendline resistance. It was about 11 days. So I was expecting this peak here that we saw on Thursday to come this week, early this week. We actually saw it at the end of last week, so earlier than expected, but nonetheless still painting this wave pattern up pretty nicely. As you can see, so far since hitting it on Thursday, we came down rapidly from it, and we've now started to find some resistance along it. So for me, it's still pretty much at play. We do have this short-term bearish pattern unfolding from that peak that we saw there on the 7th of October. It looks like we are going to continue to trend to the downside. So for me, it's still a very clear bearish pattern here to trade. If you are looking for stops in case it turns to the upside, of course, this descending trend line for me is the key at the moment. As I said earlier, look at those previous daily highs that we've seen over the last few days. Friday's high at 85.60. Thursday's high at 86.90. Those are going to be in key areas because those are painting the descending trendline resistance as it goes along. For now, down about 2.5% so far today. It looks like we are going to continue to go down even further. And then we are looking for this pattern to see some further tests of the descending trend line before finding a floor and turning to the upside decisively and breaking above that line for good and leaving it obsolete. So for me, we still have a good area to go. We still have definitely below 80 and potentially back towards 72 before we start to see that buying momentum really come in. Of course, as I said, it is a very choppy market. There is a lot of noise and we are going to continue to see volatility. So it looks like for me, more intraday opportunities or short-term opportunities rather than trying to ride out the whole wave. But we've definitely got some momentum going today to the bearish side, of course. But look out for those short-term reversals hitting that descending trendline resistance and then heading down once again. I think as soon as you start to see some resistance along that descending trend line, that's your entry point. That's when you're going to know we're going to get at least a bearish session out of it as we see this pattern unfold even further. Well, there you have it. That is it for today's video on West Texas Intermediate. Oil prices still very bearish for me in the short term. And of course, keeping an eye out on that technical pattern, which is proving its validity, cementing this fourth wave and seeing that descending trendline resistance, sending oil prices down in the short term.